we specialize in purchasing like future payment streams from
So if you have W-2 employees in your company that worked during 2020 and 2021,
we funded a guy 39 grand.
We're in a position to help people because that's really what we're doing, right? We're doing a lot of stuff right now. We're pushing hard into the ERC stuff, helping out a lot of businesses with that. We've got our multifamily investing. So we're investing in apartment buildings and also self-storage. All that stuff's going really well. Tell me a little bit about, your stuff and the structured settlement things that you're up to.
Yeah, no, and appreciate you setting some time aside to be able to do this call together. I think it's good for your audience and mine to introduce ourselves and what we have to offer. So hopefully we'll bring some people value here. But yeah, on my end, my business, American Annuity Funding, we specialize in purchasing like future payment streams from annuities and structured settlements to help those people get their cash now. So it's kind of interesting situations. You deal with some people that are in some emergencies, and yet you deal with some other people that maybe have a business or have really good investment opportunities where that cash now is just going to get them a much better return on their investment as compared to something like an annuity, because they're guaranteed, they're nice, they serve a purpose, but it's so low interest bearing having that guaranteed aspect. A lot of these, I'd say on average, you see 3 to 5% typically, because a lot of them were set up like decades ago.
Okay.
If you were getting one set up today, you'd be getting a little bit of a higher return, like maybe closer to 6 or so.
Okay.
But yeah, a lot of these are 3 to 5.5%. So it's low interest.
Okay. So if somebody's in a car accident and they have a lawsuit, right? And then they're awarded some money, but it's meant to be paid over like 15 years or something like that. Then what you guys do is you go in and you give them all of their money up front and then you take over that. Kind of explain to me how that side of things works.
To set the stage a little better, I'll preface that answer with a structured settlement comes from somebody like you alluded to with one situation, which would be a personal injury. The other couple sides of it could be a wrongful death and even a medical malpractice. I guess I would use the term awarded for somebody that's a lottery winner, because that truly is an award. On these structured settlements, something negatively certainly impacted them physically, mentally in their life to be even deemed to have this type of monetary compensation on their side, right? I lead into that with saying that I think that structured settlements serve a good purpose for a few people. If you're of retirement age and you need a guaranteed income source for retirement, I think an annuity or even a structured settlement type of annuity is a great option. You need a guaranteed income. Same with somebody who got seriously injured. Let's say that car accident example that you gave. If they got injured to the point where they're not physically able to work anymore, or they like have a severe disability, I think it makes sense to actually keep that policy in place and have themselves that guaranteed income, because it's meant to replace their ability to work. Like, what type of income could they get in the workspace as compared to what is this paying them now? It's probably might not be dollar for dollar what they can make in a salary, but it's meant to compensate that salary or hourly wage.
That makes great sense, because it's right for some people and definitely not right for others.
Yeah, exactly. Who it's, in my opinion, I mean, everybody's opinion is different, but who people should either not choose it or get out of it is if they're healthy individuals, younger people as well. Let's say if you're in your 20s, 30s, 40s, I think it's a great option because you have a lot of time on your side in terms of longevity of life still available to you. Like, why not bet on yourself? Why not bet or invest in multifamily real estate, kind of like what you mentioned? Like, those are probably going to get you a much greater return, and you can afford to have a little bit of risk, but you still have so much time on your side that risk is probably minimal, right?
Yeah, I can totally see that. All right, so who would be the ideal client of yours to, let's say that they had a structured settlement but they still have a job or something to that effect, where they have their monthly income and they have like this big chunk of money that they can't access? Who is that ideal person and what can they do with that money?
The ideal person to me is going to be from your 20s to your 40s, somewhere in that range, because like I mentioned to you before, you still have a long life ahead of you. Any type of investment that you get into outside of the settlement, with that much time on your side, you're giving yourself a great window of opportunity. If you go into something with a 3 to 5 year plan, there's higher risk there, inevitably, right? You just don't don't have a lot to make up for. You'd have to have a really, really high return on that. But I'd say somebody that has the ability to also make up for what they sell. So let's say somebody's getting $2,000 a month or $3,000 per month from a settlement right now. It was originally probably set up in most cases when they were a minor, and maybe the parents or guardian or attorneys thought that that structure was really good at that particular time. And they can't legally start receiving payments until they turn 18. Let's just say that they're getting that $2,000 or $3,000 a month now. If you can enter the workforce or have your own business and have your salary or hourly wage replace that monthly income that you're selling the rights to get the cash now, I think it's a very smart play, because you're not relying on that to pay your bills, your expenses, the phone bill, the light bill. You can afford to have your job, your active income, pay that stuff, and have this kind of be in the background more as investment money. I think that's like an ideal person.
Okay, that's cool. No, I like that. And that makes a ton of sense because, yeah, if you can replace that income, right, that monthly payment income, then why wouldn't you want access to that cash so that way, you can actually use that to grow or start a new business or hire people for your business or like invest in real estate where that money is just going to get parked and you're going to let it grow and just, keep that revolving door of cash flow going. And I mean, I guess like even if you invested it in like some other business or into real estate, it might even pay you more than what those monthly payments were paying you, depending on how you invest it and grow it.
Oh, 100%. I mean, I've worked with a lot of people that do it. And I think it's not even just about, let's say, working with a financial advisor, investing in single family homes, commercial real estate, betting on yourself too. Like one of my most recent, or two of my most recent clients, like, so you had a girl, Amanda, she was only getting like $350 a month. Like, what is $350 a month really paying for, right? We were able to help her get like close to 15 grand, and that 15 grand was going to help pay for tuition costs and what she needed to be officially become a registered nurse.
Awesome.
And we figured out that, okay, if you sell this with your additional salary, you're going to make like almost $1,000 more per month net take home.
Wow.
Add that up over a number of years, right? Yeah. It's going to be much better for her to get rid of it, not take on the loans, the student debt. She didn't want debt. She's like, I want this to be paid off. I don't want to have to worry about paying bills or add to my monthly expenses. Let me liquidate this asset and pay. So she did. And then actually last week we funded a guy 39 grand.
Wow.
He sold $500 per month for an extended period of time, but it was the same thing for him. Like he's now going to pay with part of the proceeds from that 39,000. He's going to pay for trade school outright, become a mechanic, which is what he always wanted to be. And guess what that salary pays? He's estimating a minimum $4,000 per month.
There you go.
His only income was the annuity, which was $500 per month. And now he's going to be able to have a $4,000 salary. Like it's a no-brainer to sell that and pay for your education.
Yeah, man. I'm going to go on a little tangent here because I love this stuff. And I love that, we're in a position to help people because that's really what we're doing, right? And you can give a man a fish or you can give him a fishing pole and teach him how to fish. And what this guy just did for himself is, you helped him learn how to fish. Like he already wanted to learn how to fish. He's not asking you for one fish a day. He's asking you like, hey, help me out. Let's figure out how I can teach myself how to fish so I could feed myself for the entire year. And I think far too often, like people in general lose sight of like the real purpose of why we're here, and that's to help people, and because we want to see people do better. Like when we help people do better, like I mean, I know I feel good like when I'm able to help someone grow themselves, grow their lives, do something like very good for their family. Like it's really rewarding for me.
No, it's the same here. And don't get me wrong, I mean there's bad apples out there just in every industry. Like there's companies and individuals in my space that I'm sure don't really care that much about the customer, but like I do. And the people that, I hire like to be on my team, like I make sure that they have a pretty high moral compass as well, because it's very easy to just do a deal if somebody wants to sell it to go on a vacation, or if they want to sell it and that money's just going to sit in a bank account. It's earning no interest there, and we're losing money if we don't accept that business. I also know that we have to bring these people through a court ordered process, explain what they're using the money for to a judge, and that judge has to deem this is actually in their best interest.
Wow.
So if it doesn't make sense to us, how am I going to make it make sense to a judge? Like
Yeah.
it's doomed for failure from the beginning, but at the same time, it's not getting started in a bad transaction, and it's B, also trying to look out for them.
Yeah.
So going back to what you said about like who's my ideal customer, it could be anybody that has the ability to take this money and do better for themselves. Simple. Like, can you make this money do better for you than the current structure of that annuity?
Yeah.
That's the perfect person.
Yeah, it's very simple because like you want to be ethical, of course. You are very ethical in what you do. But like that process forces you to be ethical because you can't cut corners. The judge is going to see right through anything you try and, put across their desk. And if it's not good for the people,
it'll get denied, So, I mean, it does add a layer of protection, but, you're also leaving it up to the individual going to court, trying to go through a transaction to still be honest about what they're using the money for. Because no one's following them around after the court process is over and double checking to make sure every dollar was allotted to what they said. So you are kind of taking somebody's word for what they're telling you.
Yeah.
But the more that we can get somebody to open up and trust us as that valid, ethical, professional person in this space, we can get more truth out of them, and we can really deem like, is this what's best for you or not?
What if somebody already has a good salary or they own their own business, but they do have, this payment that's coming to them? They want to cash it out, like, for example, to invest in real estate.
Okay.
So how does that work, like with a judge? How do you present that, and what does it look like?
So I guess it depends on the investment, right? Before I answer that, let me ask you, with your company, Unified Capital, what types of returns are you typically able to get people that invest alongside of you in multifamily? Like, is there an annual rate that they're getting a payout, like a dividend almost from? Are they making a multiple on their funds over a certain amount of years? Like, maybe you could explain that, and that helps me better answer with your example.
Sure. Yes. What we target somewhere in the 18% to 20% annual return. And that's usually cumulative over a number of years that we hold the properties. Basically, how it works for us is we buy a multifamily property. So we'll buy an apartment complex. We'll bring a bunch of investors together and we all buy it, and then we'll fix it up, and then we'll hold it for a number of years, and then we'll sell it. Just like somebody flips a house, we flip apartment complexes. It's a larger scale, takes more time. And so your money sits in the deal longer. Let's say somebody invests $100,000 with us.
Okay.
When we sell the property, we want to get them usually twice the amount of money that they invested. So if they give us 100, they invest 100 with us, we give them the original 100 back plus another 100, and that's their gain. So let's say we hold that property for 5 years. We're doing
20% return
per year. Exactly. So 5 times 20 is another $100,000 that they get. And so you have about a 20% annual return. And then what they call the equity multiple is how much money are they going to get? We usually go for 2 times. We want to double your money is basically what it is over the course of about 5 years.
And that's phenomenal. So let's just use that as an example then. If I was presenting that to a judge, let's just hypothetically speak, and every situation is different, because when we quote people, we have to take into account the insurance company and who's holding and issuing their policy, because some are higher ratings, could be A+ company, like say Pacific Life or MetLife, or you get a B- paper now, like Genworth as an example. So those ratings vary in terms of risk in an investor's eyes. But let's just say we got somebody somewhere between an 8 to 10% discount rate, which is essentially the opposite of what you're explaining. So if I was taking future payments to come up with a present day value, we used a form of an interest rate called a discount rate to get what it's worth today. And if we were valuing that between 8 to 10%, and you're getting somebody 20%, they're making more than double the rate with an investment like you're offering, as compared to sticking with that settlement as is.
Okay.
If that's the case, let's say we got somebody $100,000, maybe they're only due to get 150 from the settlement, but with you, they're getting a 2x multiple on the principal. It's a lot more money for them.
So you could present that to a judge and you can say, hey, they have a great salary or they have a business that pays them well. And so they don't need this monthly payment, but they'd rather take their settlement, their chunk of money, and they want to invest it into real estate because that's what they
Correct.
want to do for the long term, for their family, for generational wealth. And the judge
Correct.
would look at all of those documents and everything you present to them, and they would award it because it's beneficial to the client.
Yeah, they would deem all that. They deem their age, make sure that they understand exactly what they're doing, that they're of sound mind and capable of making these types of decisions. Did you or did you not seek professional advice through maybe a financial advisor or an attorney? Not that it's necessary, but sometimes that can be a bonus. If the investment had a track record, maybe including paperwork as an exhibit with the petition in order to show here's the documentation that shows X, Y, and Z. Here's a 10-year history of what Unify Capital was able to do for their investors, and an example of previous projects that actually paid out what we're offering, because 20% to the normal person sounds like a pretty damn high annual rate of return to be getting. Mm-hmm. So just having that track record and making sure, yes, that they do have a salary, that they don't rely at the income, and that it is truly beneficial for them, which the numbers will speak for themselves if they're along the lines of the example that you gave. Kind of a no-brainer to have that approved for somebody.
Yeah, well, that's amazing, man. So, I mean, obviously, like, past performance is not indicative of future results, right? We got to say that.
Of course.
But yeah, typically that's what we target for any kind of multifamily or self-storage investments.
That's awesome.
Yeah, and it's been going really well. It's been going really, really well. So we've made a lot of people really happy.
So if you're watching this and you have a structured settlement and you want to speak with Steven on how he can get you that type of return, I highly encourage that you reach out, set up a call with him.
Yeah, man, I appreciate that. That's cool.
So we were talking too, outside of that, with Unified Capital, that you also are helping business owners with ERC.
Oh, yeah. Yeah, it's huge. ERC, it stands for Employee Retention Credit, and it's a government program. It was part of the CARES Act that happened, like, during the beginning of COVID. And it's an IRS refund of payroll taxes that companies have paid for their employees over the last couple of years. So if you have W-2 employees in your company that worked during 2020 and 2021, they don't have to have been continuous, because actually the IRS goes quarter by quarter to qualify you. So you could have only had an employee on for like one of the quarters, you would still qualify to get a refund. And it's a refund and a credit. Some people call it a grant, but it's not a grant because it doesn't qualify under certain rules for what a grant is. But it's a refund, and then they credit you more money because they held on to your money that they owed you. So they actually pay you interest on top of the money that you're supposed to get back. So it's crazy, man. A company can get up to $26,000 per employee. That's a lot of money, right? Like, so
you have 10 employees, you qualify to the full amount. That's 260 grand that business can now have access to. Yeah. And who knows what does that fund? Does that help you hire more people? Does that fund inventory? Like,
yeah,
I'm sure the opportunities are endless for those business owners to immediately like plug and play fast growth, having that type of capital.
Yeah, absolutely. And it's not limited to like what you can use it for. So you can use it to pay payroll, pay rent, buy equipment, expand, hire more people. Like, literally you can use it for anything in your business. The money comes as a check from the IRS. I wish I had some checks with me, but I don't. It's literally a check that from the IRS, just like when people got like stimulus checks, those like multicolored, it looks exactly like those checks from the IRS. And what we're seeing is, like, most businesses, they qualify for about $15,000 per employee on average. That's what we're seeing. Because to qualify for $26,000 for the full amount, you have to meet like a lot of specific criteria. Most businesses qualify for about $15,000 on average. So, for example, I just helped out a local company here in Ventura. They're a clothing brand. They have a clothing store on our main street, and they're a very popular brand. But they were completely negatively affected by COVID. Part of their store had to close down, and they had shipping issues getting their product in from overseas. So, like, they had all these different qualifiers. And during the time, they only had 6 employees on staff. They're getting $102,000 back.
Well, especially you being California,
Sure.
LA area, you guys were really shut down. So I'm sure a lot of those local businesses could
Yeah.
really benefit from having access to that money.
Yeah, absolutely, man. And so the cool thing is the application process is like really, really simple. It usually takes about 10 minutes to go through the application that we have set up online. And there's only a few documents that the company needs to upload, like just some payroll tax documents that you can easily download, like from your payroll service. If you use QuickBooks, Intuit, if you use Gusto, or even ADP, you can download those documents really easily. Or if you have your CPA or somebody else do your payroll, they have those documents. And so it's really, really simple. And the process is real streamlined, and everything is open and upfront. And the number one thing I get is,
That's great.
when do I have to pay it back? And I'm like, no, you don't. Like, you don't pay it back. It's literally a refund from the IRS. And then the other thing I get a lot is, oh, I don't qualify. I already looked into the program because I didn't have a loss in revenue or revenue reduction. That was the original rules that they had set when they created the program. They've since amended the program 5 separate times. So now, like 95% of businesses out there qualify for the program, but they don't know that they do. They already thought, oh, I checked it out and I don't qualify. So it's,
Why do you think they had all those amendments to, I guess, change the rules or qualification process?
yeah, it's to help people out. Really, it's to help the American small business. And actually, it doesn't even need to be a small business. I mean, we've had companies that have 100 employees, and we've been able to help them out. We have a local company here in town.
That's like 1.5 million based on your
They got
averages.
they got 1.8 million.
Wow.
And it's a local company here in Ventura County. I can't say the name, obviously, for privacy, but
Yeah.
they thought they didn't qualify. We went through the process with
Think
them.
about what 1.8 million will do for them. I mean, that's
Unbelievable. They've been able to expand their territory. They've been able to improve their facilities. They've been able to do things like offer better health care for their employees, for their workers. Like, it's been unbelievable. And the thing is it's not really publicized that much. Like PPP and like the EIDL, the economic impact disaster loans, those were publicized a lot because it's a loan, and that loan has to have interest paid back on it. And so of course, like, people are going to be pushing that out there because they make money on the interest, right? Well, they don't push this program at all because it's literally a refund of the payroll taxes they already paid in. So I get that a lot too. They're like, oh, this, I've never heard of it. Like, this is not real. And I'm like, let me show you the IRS website. It's right here, here, and here. Let's check it out together. And so I get a lot of shocked people. Like, they're like, wow, this is actually a real thing. And then I get a lot of people who are like extremely grateful for the opportunity because they didn't know that their business qualified for this stuff, and all of a sudden they're going to be getting a check for 100 grand. And I absolutely love it. I love helping these people out. Like, look at, like, seeing the look on their faces, and then when they get the actual check, like, that's the moment for them. They're like, holy crap. Like,
you're right. This is
yeah.
real. Thank you,
Yeah.
Steve.
Yeah. And all of a sudden, that their phone, they start picking up their phone and they're like, hey, you got to talk to Steven about this stuff. Like, it's legit. Like, look, here's my money. And anyway,
Yeah.
it makes me really happy to help people out. Just like what we were talking about earlier with your side of things. Like, it's a huge opportunity for a lot of people out there. And I'm really excited. So my goal this year is to help out 400 businesses get their money back.
So with 400 businesses, based on what you've seen as an average, and I know that part of our network group here, like DM Alliance, we all have lofty goals with how we want to bring value and help people. But 400 businesses, awesome goal. But I'm curious, what is the dollar amount that would bring to people in your network or businesses that didn't know this opportunity existed?
I mean, if we're doing the average of 15,000, right, per employee, and I'm glad you asked the question because I've actually never done the calculation. So bear with me 2 seconds while I run. If we say the average business is going to get 100 grand,
Okay.
we're talking about $40 million.
$40 million.
Yeah, back to the local community. That's $40 million for them to reinvest in their businesses, in their employees, into the community. That just helps everyone
Amazing.
exponentially, And it's going to create jobs too, because these people, they're the business owners, they're going to take this money and then they're going to say like, cool, well, I've always wanted to do this with my business, or I've always wanted to improve in this area. I need to hire somebody. So now we're job growth. Like now we're creating jobs. It's really amazing what this is going to be able to do for a lot of people. So,
but I'm sure the question you get asked a lot too, and it's not meant to put you on the spot too much. What do you get out of like helping these businesses? Because I'm sure people come to you and like, Stephen, I appreciate it. I know you're telling me I'm going to qualify for 150,000, but like, why isn't my accountant? Why isn't my CPA? Why isn't my attorney? Why aren't they telling me about this? Why did it take you having to come to me to tell me? Like, what's in it for you, Stephen?
yeah, that's a great question. So the short answer is we make a processing fee for processing the documents. The long answer is it takes a lot of time. Per employee, it usually takes 2 to 4 hours to process these documents with the IRS per employee. So you're talking about a company who's
I
got,
think you're cutting it short. I've heard that it takes up to 20 plus hours
well,
or even maybe more per
I
employee.
might be
I
cutting,
know it's a long process.
yeah, I might be cutting it short, but if we go on the 2 to 4 hour calculation and you got 10 employees, that's 20 to 40 hours of work for somebody to process these returns. The thing with CPAs and attorneys is like they don't specialize in this stuff. We do. Like this is literally all we do in this company. It's a US based company based out of Utah. We have over 200 employees in-house with the company that does all of the processing. There are CPAs, there are attorneys in-house. Actually, we have an attorney general on the board of advisors for this company, along with multiple teams of lawyers. And the company makes sure that everything gets done right.
Going through the IRS, yeah.
Going through the IRS, nobody wants to get audited, right? So everything's got to be exactly how it's supposed to be. And so that's kind of the reason why CPAs and other attorneys really don't focus on this stuff, is because they don't do payroll. They don't run payroll for their companies. So a CPA, they'll do the tax returns every year, right? And they'll file those corporate tax returns or business tax returns, but they don't file the payroll stuff. And attorneys definitely don't do that. They don't do any of that stuff. So, but we welcome to have accountants and CPAs call us, question us, and help us out. Same thing with attorneys. We actually have quite a few CPAs that refer their clients to us because this is what we do. So I just got off the phone this morning with CPA. They're going to be helping out 3 of their clients, and they're going to be sending them to us. They've already put them through the system, and now we're just processing their applications. And one of the cool things about that is, like, for a CPA, it's like, hey, I just found a way to better your business, Mr. or Mrs. Client. Mm-hmm. And so the CPA now is like adding value to their clients in another way that they didn't know was possible. Same thing with insurance agents. So we have a lot of insurance agents that refer their business clients to us because they're like, hey, yes, I do your insurance stuff and I'm giving you, the best price that I can on your policies, but I can also help you with this other thing. Go talk to my friend Steven and he'll help you out and explain to you, what the IRS owes you. That's the long answer. The short answer is, of course, we charge a fee for doing all the processing because it is a lot of work. And then the long answer is we do it because we specialize in it, and not a lot of other people specialize in it.
Perfect. So I'm curious. So we've covered like a number of things from ERC to real estate investing and kind of what I do here with structured settlement funding. If I were to ask you a question to put yourself in one of my customers' shoes, for example, you had the ability to, let's say, just use a large number, right? Let's just say $300,000 owed to you personally over the next 25 years. Or instead of that 300,000, you get 150,000 now. What would you choose and why?
It's kind of like when you play the lottery and you always think like, okay, am I going to take like the lump sum? I'm going to get half of the $2 million jackpot, or I'm going to take payments for 25 years or however long it's structured for. I think it depends obviously on your personal situation. Like, what can you do with it? Also, is it wise to take all that money right now? If you're asking me personally, I would take the lump sum in a heartbeat. I would take the lump sum like immediately, because I know that I can take that money and place it in other places that's going to make it grow exponentially compared to just getting a monthly payment over a long period of time.
Yeah.
That's not going to help me as much, right? Because I'm in a position where, I have a business that I get regular income from. And if I had a big chunk of capital, I could do the same thing we're talking about all these other business owners doing: hire more people, grow, expand, and
Which
be able
gives
to.
you the ultimate higher rate of return on that money. And you're going to make way more over that 20-25 year span.
Yes, absolutely. So
I think it also goes to show that, like, you make a good point, though. It's like, if you don't have, say, your level of expertise, it might be wise to wait in doing anything at all. Level yourself up, invest in yourself, learn the skills that you need to learn, whether it's sales or marketing or about particular investment avenues. And once you become kind of a pro at it, then maybe it's time to make that right move. But I think everybody's at different stages in their life too, right? So somebody could already have that level of professionalism or that level of skill where they could turn it into something quickly, whereas others haven't even started educating themselves on it yet.
yeah.
So
Well, so the gentleman that you helped out recently, who's going to go to mechanic school, and
yeah,
he's going to become a mechanic, and he'll make his $4,000 a month. Well, let's say that mechanic was already a mechanic and he'd been mechanicking for 5 years. He knows the business inside and out, but he works for somebody else. He wants to start his own business and he wants to break out on his own. But that's going to take him a huge chunk of cash, because he's going to have to rent a space, outfit it, tool it up, put lifts in to lift up the cars, or I don't know what kind of mechanic he is, but I'm just assuming, let's say car mechanic. And that's going to take him, depending on where he lives in the country, minimum 100 grand to start that business. So if he's already in that position and then he has this structured settlement where he can get 150 grand right now instead of 300 over 25 years, that gentleman takes that money right away and then builds this business and has his dream business that he wants, and he owns his own mechanic shop.
yeah, I'm with you.
Without a doubt, man, without a doubt.
I think there's another side of the equation that gets, I think, left out, and why people choose not to act as well, is they see a number on paper that's not worth what it is today.
Yeah.
Like 25 years. 25 years is a long time. And when you see $300,000 on paper, a lot of people think immediately, like, I have $300,000. And it's like, but you do, but you got to wait 25 years time for it to all slowly drip in.
Yeah.
It ain't 300 now.
Didn't mean to cut you off. What about, inflation, and how much is that 300,000 actually going to be worth 20 years from now?
Well, that leads to my next point. Let's use real estate as an example, right? I can't speak as much on commercial like you can maybe, but I know more historically on single family. But use single family, right? There's like 130-year history since like 1890 where real estate averages 3% growth per year. Historically, through the ups, the downs, whatever, 3 or 3.3% per year is what real estate averages, which means that your property value doubles every 24 years. So let's say somebody right now has a $250,000 home. Why aren't you selling it for $500,000 today? You're putting it on the market with what it's worth today, based on what comparable homes have sold in your neighborhood, in your area, based on bedrooms, bathrooms, renovations. It's only worth $250,000 today. But if 24 years from now that home's going to be worth $500,000, again, wrap your mind. Why aren't you listing it for sale for $500,000? Because you can only sell what it's worth today, right?
Yeah, makes perfect sense. Makes absolute perfect sense. Yeah. I think there's a ton of value to what you do. I think it's huge. I think that you're literally unlocking what people are capable of doing today, rather than like this slow dripping faucet over 20 years. You're dumping the bucket. You're just literally dumping a bucket of money on top of them right now.
Speed and efficiency, I think, is one thing that we've learned from some very high level people that may be in your network, that I know are in mine. And those people act now and they act fast. If you want to unlock the potential to get to the end destination sooner rather than later, you have to act with speed. And unfortunately, these products, again, they serve a purpose for certain people. I've described a lot of them that should stick to where they're at because it gives them the safety that they need with their particular situation. But for a lot of people, this could really fast track their earnings and their potential financial freedom or their wealth a lot faster than they would otherwise just leaving things the way they are.
Yeah, for sure. I mean, like, it's a shortcut. Totally a shortcut. You know, just like getting around people that are doing things that you want to be doing in the future. It's a shortcut. You learn from people who've already been there, who've already done it, who've already made the mistakes, just like you and I do. And so it's unbelievable, man. I'm really happy that like you're able to help all these people out and show them a different path too. So the mechanic, if he just kept on mechanicking for the next 15 years, he would just make a salary every single month. But showing him a way that he can build a business, right? And you're facilitating that by dumping that bucket of money on top of him. It's amazing. I love it. So
yeah, man, that's why I appreciate, like, us having this conversation right here, right now. Hopefully it helps maybe people that are in your network that have a settlement or an annuity that never even knew this option existed. They just thought that they were stuck with it the way that it was forever. Like,
yeah,
that might not be the case, and we can help you look into it. We got business owners that could be watching this that could reach out to you about ERC, and we got the best of both worlds. They could be settlement people, they could be business people, and guess what? Now they have a guy like yourself that they could turn to about really cool commercial investing opportunities that are giving like 20% annual returns. I mean, that's a phenomenal rate.
yeah, man. Well, I really appreciate this conversation, and I appreciate you taking the time today for this.
Yeah, you as well, man. Thank you.
You're very welcome. All right, I'll talk to you soon, okay?
All right, take care, man.